Hey everyone, I wanted to go and discuss two trade setups within the cyber network security sector. This is a very hot sector. There are a lot of high profile cases of hackings, Sony being one, Anthem Blue Cross being another, Target. We've had a whole bunch of these where sensitive information was leaked. And so the products and services of these companies are going to be so vital to corporations going forward, and also with government snooping, all this kind of stuff. So I want to take a look at two in particular, is Vasco Data Security and CyberArk. I think these are both setting up for pretty nice runs, and so we'll take a look at the patterns that are developing. First, Vasco Data Security. You see here, it's a chopstick pattern that's forming. We see here a nice slow downtrend, orderly pullback along the 10-day line here. And today we got a crossover of the downtrend line. We also have it on higher volume, which is nice. We're also in oversold territory, so that's also nice. And then also, if you look back here, we had a gap up here and pull back to it. This would be the second pullback to it. So this would be a really good solid support area for the stock, and we're bouncing off of it. We had a nice price action, 6.71% today, closed above the 10-day line and crossed over the downtrend and the 10-day line at the same time. So this is looking very good for a chopstick pattern setup. Now, considering that this sector is a pretty hot sector and the stocks can move rather quickly, I would want to make a more aggressive entry. Normally with the chopstick pattern, you want the stock to make a high, a local high, and then pull back and then go ahead and break that high so that you have a new uptrend. However, when a stock is in a hot sector or can move quickly, you want to be more aggressive, because if tomorrow it moves another 10% or 6%, your stop, which is around this area, is going to be too far away to make it, to minimize your risk. So risk management is very important in being a successful trader. So I would try to get into the stock tomorrow. For those of you who are not able to watch the market, a good idea would be simply to put a buy stop above today's high. So today's high was 23.55. So a buy stop at 23.60 or 23.65 would ensure that if the stock moves up, continues its move up, it'll catch your stop on the way up. Now, if it pulls back and kind of hovers lower here, your stop won't be triggered and you won't be kicked into the trade. And you can adjust the stop, at the end of the day to tomorrow's high. So I'm going to go ahead and just say today's high would be my buy stop, and that buy stop is going to be 23.60. 23.60, and this is going to be my buy line. And I'm going to have the stop placed in this area here, and I'm going to go ahead and format that so that you can see. So this is our range here, and this would be our breakout line. The price target I have on this is, I'm going to go ahead and look at this high. I'm gonna bet that we retest this high, and so when we look at our profit loss tool here, we see 25% profit target, which is nice, and risk of about 11.38%. So 50-50 type of trade here. Obviously, I'd love to see it go much higher, but at the very least, we're gonna profit. Take a minimum of 25% profit. We'll have to take a look at how the trade continues. Obviously, we're not going to blindly just wait for a 25% move, but this is setting up very nicely. One of the things I also wanted to go over because I'm not very familiar with all the uh, individual names in this sector. So when I came across this chart, I had to review the earnings history of the company. And TradeView makes it really nice here. They have all these little earnings dots here that kind of show you past earnings. And it's a really quick way for lazy traders like me to look at how the company is doing. Now, I'm not a financial wizard and I don't do a whole lot of fundamental analysis. Basically, what I'm looking for is that a company is profitable and that their earnings is growing. It's doubling or tripling or quadrupling. Those are exciting numbers to me. All the other stuff in between, it doesn't matter. At the end of the day, it's how much money the company brings home. If you look, and another thing, reading O'Neill, I believe he mentions that a stock will start moving once they've had 3 quarters of EPS growth. And I've always kept that in the back of my mind, and I've observed it. So I think he's pretty right about that. And you can kind of see it here. You've got here 3 quarters of 5-6 cents EPS earnings, and then on the first quarter here we have a doubling, or more than a doubling of this quarter's EPS, and then also the same here, a little bit more than doubling EPS. And so we got 3 consecutive quarters of more than doubling of previous EPS. And go ahead and you see the stock start moving. And then you see the volume coming in. This is, this was probably a gap up intraday during the week, and earnings continues to grow. Here we do have more choppy trading. Part of it may be due to, the market itself, and part of it maybe from this earnings. Maybe they gave bad guidance or whatnot, but that's just probably 1 quarter. We'll see how this earning goes. This is definitely what I would consider a earnings run. We'll probably go ahead and run into earnings. Although earnings is still a bit of a way. It's still got a month and a half. But I think here the stock will start moving. So that's Vasco Data Security. The other one I wanted to take a look at is CYBR. This also had great earnings. It's a new IPO. So if we look at the earnings dot here, we see that there was an EPS of 17 cents on estimates of break even. And again, second quarter of EPS of 18 cents on estimates of a penny earnings. So this stock is doing really well. Definitely something to keep an eye on. But let's go back to the trade. Here we've got a high here and a pullback, a nice orderly pullback, and we've got what looks like capitulation here, a lot of selling here, a lot of volume selling, but not a lot of price movement. That means that there's for everyone who's selling, there's someone buying here. And then we got a little bit of price movement and lower volume. And then we got a reversal candle here, a reversal candle on higher volume, and that's a really good bullish signal. And on top of that, we get a break of the downtrend line on also pretty decent volume compared to the recent days trading. So I think that this is ready to move back up. It's made a spectacular move here post earnings and also pre earnings, and so there are definitely some profit taking here. But I think it's ready to go back up. What you see here is a chopstick pattern on this off of this high, but there's also a downtrend line off of this high. And what will probably happen is it's going to face resistance here, and it may move down here, pull back along this line, and then break out. But here we want to be as close to the stop as possible. Would be a nice aggressive entry. You might have to sit a little bit for it to move higher, pull back, and then head up. 10-day would obviously also provide some resistance. So this is setting up very nicely. It made a nice 5% move today, and with the great earnings, I think this is heading higher. I would price target would have to be at 63.41, and then also here at 70.75. And if we can clear 70.75, the sky is the limit, and that's what I like. So those are the two stocks I'm taking a look at tomorrow. Keep in mind tomorrow is the FOMC meeting, which can bring a little bit of volatility to the market. I hate getting into a stock early only to have to get out of it because of the volatility. I don't want to be shaken out. But just keep that in mind. So that's it. And if you like to keep updated, please click on the subscribe button so that you can get, YouTube will spam you and let you know when I have a video up. All right, thanks for listening.